Hey everyone, welcome back to Corporate Decoder. Today, Liquidity Services Incorporated just filed a material agreement amendment for their credit line, and I am seeing a surprisingly positive signal for their stability. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is extending its borrowing power, which could mean they have big plans or need flexibility. Alright, so what we have here is an 8K filing, which is basically a company's way of telling the public about a big event that could be important to investors. Today, Liquidity Services Incorporated, known by its ticker L.Q.U.I.D.I.T.Y, is announcing an amendment to a major loan agreement. Think of a credit agreement like a company's main credit card or a big loan from a bank. Liquidity Services Incorporated already had this agreement with Wells Fargo Bank National Association, which was originally signed back in February 2022. Now, as of the 22nd of June 2026, they've entered into the fourth amendment or change to this agreement. The really interesting part here is that they've extended the deadline for this loan. Instead of having to pay it all back or renew by the 31st of March 2027, they now have until the 31st of March 2028. This is a full extra year added to their borrowing availability. All the other rules and conditions of the original loan agreement are still in place. Nothing else has changed. Now, why is this a big deal? Well, when a company extends its credit line, it can signal a few things. One possibility is that they are feeling confident about their future and want to secure their financing for longer. It could also mean they anticipate needing that money for upcoming projects or to manage their day-to-day operations smoothly. Let's look at the context. Liquidity Services Incorporated is in the consumer cyclical sector, specifically internet retail. Their market cap is around $1.2 billion and their stock price has been pretty stable, trading in the $21 to $39 range over the past year. They have about 818 employees. Recent news shows some executive option exercises and share sales, which is pretty common. But a recent headline asked if the stock is fully valued after a rally, suggesting investors are watching its price closely. The company itself, Liquidity Services Incorporated, is based in Delaware and trades on the NASDAQ under the symbol L.Q.U.I.D.I.T.Y. Their principal executive offices are in Bethesda, Maryland. Their main stock offering is common stock, and it is traded on the NASDAQ stock market. This is the usual setup for most publicly traded companies. This section, item 1.01, is where they report when a company makes a significant agreement, like this loan extension. It is a key piece of information for investors because it directly impacts the company's financial health and its ability to operate. This filing also lists the exhibits, which are the actual documents supporting the report here. Exhibit 10.1 is the fourth amendment to the credit agreement itself. Now, let's think about the implications. Extending a credit line by a year, especially in the current economic climate, often suggests the company has a solid relationship with its lender and that the lender sees value in continuing that relationship. It means Liquidity Services Incorporated has more financial flexibility. This isn't a massive event like a merger or a product launch, but it is a quiet indicator of financial stability and forward-looking financial planning. It removes a near-term hurdle of having to renegotiate or worry about their main line of credit expiring in less than a year, compared to a company like Bed Bath & Beyond or Rite Aid, which face serious going concern issues and struggled to secure financing. Liquidity Services Incorporated's proactive extension of their credit line suggests they are in a much more stable position. They are not in a desperate situation needing emergency funds. Instead, they are strategically managing their financial tools. In essence, this filing tells us that Liquidity Services Incorporated is securing its financial runway for at least another year, given the company's market position and the recent news about its stock valuation. This extension provides a degree of reassurance that their operational plans can proceed without immediate financing concerns. It is not a flashy announcement, but for those who prefer the solid foundation of well-managed finances, this is a positive development. The extension implies the lender, Wells Fargo, is comfortable with the company's current trajectory and future prospects. It's a vote of confidence from a major financial institution. That is my take. Stay decoded. If you found this breakdown helpful, hit that like button and subscribe for more. Check out the Discord in the description.